Hello and welcome back to Bunnex Investment Group. So in this video, we are going to clarify where most traders are getting it wrong when using the 3-day cycle. So I get a lot of questions. Why is the market tripping us and how can we go around that particular effect? So the first thing that I always reply it, master where the neckline is issued. So what do I mean by that? Stick up to the end of this video so that I can clarify the war issue. The first thing that we always know is after 3 days of drop or 3 days of rise, we expect to see a reversal. Like in this particular case, we can see there was a drop, right? A day of drop, right? Another day of drop. And then we had the last day of drop. Here comes the factor of subjectivity. When we see these 3 days of drop, what do we expect? A lot of people would say we need to see a W pattern or we need to see a double bottom in this particular instance. However, in this case, there was issued the first leg clearly and then the second leg clearly as well. However, we can see the market actually going to the downside to create another leg within that particular trend. And this particular creation of this structure was actually a trap, or we can say it was also a stop hunt, but we are saying master where the neckline is issued. So how do we define a clear pattern that is likely to play along what we expect? We need to see the neckline of the pattern at the 50 EMA, which is the one in blue. For the purposes of those who have just started following this channel, we use these EMAs to simplify how we see these cycles. We have the 200 in white, the 50 in blue, 13 in red, and 5 in yellow. All these are exponential moving averages applied to close. So we are saying when we are issued with this particular type of setup or this W pattern, we do not validate it. So for the purposes of avoiding to be trapped, we say we need to see a retest of the 50 and then creation of the second leg. Therefore, we can consider all these trap move or actually a manipulative move that is being issued. So we are saying first leg, retest of 50, then second leg. Like in this case, we could see there was first leg and then the second leg was issued after we had or price had interacted with the 50 EMA. Let's have more examples to fully understand. So in this case, we can see there was completed of the 3-day cycle, 1, 2, and 3. After that, they issued a fake pattern which was not following the rules that we have just laid, and then there was creation of the W pattern rightfully with a neckline at 50, and the market went to the reset point. After that reset point, we can see there was restart of the daily of the 3-day cycle, which was 1. Then all these days were not days of drop. This was now the day of drop, day 2, and we had the last day, which is day 3 of drop. Right? On day 3, what did they do? They actually created first leg and then the second leg. First leg and then the second leg, which was not following the principle that we have actually laid out. We've said we need to see a neckline at the 50 where price interact with the 50 EMA, the one in blue, for us to get an entry. All this should be seen on H1 time frame, and entry will be at candlestick reversal pattern of the M15 time frame after seeing the neckline at 50. Going forward, we may try to look for clearer 3 days of drop or 3 days of rise. So as I always say, the market gives you a few number of times. You can trade when all your rules are in place. A lot of traders do not master that and try to trade each and every day or try to have a trade each and every day. So we have day 1, day 2 of drop, and then day 3 of drop. What do we have after 3 days of drop? We expect a double bottom, which will give us first leg retest of 50 and then second leg, and the market moves away from that. You can see it's actually as clear as daylight, right? So basically it's actually creation of first leg, retest of the 50 EMA, and then creation of the second leg. We get a candlestick reversal pattern on M15, and then we go right up. So to summarize everything, the 3-day cycle is a cycle whereby we look to see a reversal at the end of that particular cycle, and after a reversal, after reaching the 3rd day, we need to see first leg retest of the 50 EMA and then creation of the second leg. That's how we will catch these reversals with higher probability than actually taking them right away as they have been presented. On that note, we've come to the end of our video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. I'll leave the link in the description box below.